Hello, everybody, and welcome back to Fast CPA and Consultants. As always, here we are with our CPA, Fulton Abraham Sanchez. Hi, Fulton. Good evening.
Hello, Monica.
Welcome
Thank
back.
you for having me.
No, it's a pleasure. So today's objective is to know more about accounting obligations of a business in the US. So this is the second video of our accounting talk. Fulton, are we ready to start?
Yes.
Perfect. So the first question we have, what are the accounting reporting obligations of a business?
In the United States, businesses are obligated to report once a year their balance sheet and their profit and loss. For that purpose, to comply with that obligation from the Internal Revenue Services, the IRS, businesses need to provide at least once a year their books. They need to do their books at least once a year. With those books, specifically those books are the balance sheet and the income statement. Those two financial statements, the balance sheet and the income statement, will allow the business to report to complete the tax return with the IRS. This is an obligation once a year. And if the preparation of the financial statement is not done in a monthly basis, it creates let's say a heavy obligation, we can say that, in the accountant. Because imagine all the businesses who don't do accounting through the year are taking their books to the accountant in that particular month. Let's say in February or January, February, March 15 is the deadline. So accounts are overloaded in doing the financial statements and also doing the tax return. That is from the side of the accountant. But in addition to that, through the year, the owner of the business has not seen the financial statement, has not seen any picture of the business through the year. So instead of being proactive, taking decisions, it's always just going with the balance in the bank statement. That's how small businesses function. They prefer to do accounting at the end of the year, and they comply with their obligation. But the problem is that they don't have the ability to take decisions through the year. They don't have a picture. They don't have a reflection of what they've done through the year with the numbers. Other businesses prefer, for example, to do in a monthly basis, month to month, do their books, and they see it every month or they see it in every quarter, and with that, they have an idea of what's going on. Once this information has been processed, the information is transferred to the tax return, and that information in the tax return is the one given to the IRS. In addition to that, businesses are also required to, for example, with the state, at the state level, they need to provide the summary of the salary they paid to the employees. That's also part of the accounting in the form of payroll. In a quarterly basis, they have to report to the state. And in a quarterly basis, they also need to report to the IRS. But that is also for payroll. Only payroll is reported in a quarterly basis to the IRS, in a quarterly basis to the state. And in a yearly basis, the business needs to report the finances, the balance sheet and the income statement to the IRS as well. Okay,
got it. And is there an obligation for a business, for doing accounting monthly or yearly, or is it the same?
No, there's no obligation to do it in a monthly basis. There's an obligation to do it yearly. In addition to that, this is the yearly obligation from the IRS. Many times, why it's better to have the books in a monthly basis, or at least in a quarterly basis, because here in the US, there is credit. There is money that is offered every time. If you have a business and you have good credit, when you go to the bank will say, don't forget, if you need a line of credit, we can give it to you. And they will give you probably 15 or 20% of your sales as a line of credit. You go to the bank and they say, do you want a loan? Are you interested in buying equipment, to buy equipment to expand your business, or do you plan to an expansion of the business? Let them know. Here, it's unbelievable. You go to the bank, and instead of you asking for money, if you have a good credit and they know you as a client for many years, they offer it to you. You don't have even to ask. They offer it to you and they qualify you. But to qualify for a loan, and this is very, very important, and that's why monthly accounting is important. To qualify for the loan, you need to have your books. You need to have your accounting. That's why at that point it's not an obligation, but if you plan to expand, if you have planned to apply for a line of credit, or if you have an existing line of credit. I know clients, for example, they have existing lines of credit, and the bank requires them to do not only the accounting, they also require a review by a CPA. So even though there is not an obligation to have monthly accounting, there is an advantage to have monthly accounting. That is, you are ready for that line of credit that your business needs for an expansion. You are ready for applying for that loan to buy better equipment, or you are ready for giving to the bank your application for a program for expansion. This will be the financial statements and then your business plan, how you are going to use the money that you are applying for. The bank will not, for example, you have a business and you are selling equipment. No, you are selling a school products for a school, and now you want to go one step ahead. One more step. You want to sell to the schools themselves. So not only to the kids, also you want to sell them to the school, to provide to the school. For that, you're going to need a business plan. And for the business plan, you're going to need financing. But to go to the bank with that will not be enough, because you need your financial statement. The bank will need a financial statement to provide what is called the financial reasons, the KPIs, the numbers, the ratios that are consistent with the loan that you are asking for. This is the nature of the accounting, that even though it's not required to do on a monthly basis, it is all up to you. If you have a plan, if you have in your strategy, there is a plan for growth. People who are not interested in growing, for example, this applies for individuals as well. Companies and individuals who are not interested in growing, they will never do their financial statement in a monthly basis. They will do it once a year. They will give it to the accountant. They will never see it, but they will stay always the same. They will not grow because they are not able to take actions. They will not take corrections. Same thing for the person. If the person doesn't have an idea of what are the monthly expenses, the person will not be able to control. And because the person is not able to control, will never cut the expenses and will always have incur into debt. The problem is that they both, the individual and the business, will incur into debt in the form of credit cards, because credit cards do not ask you for financial statements. The credit card, you will just fill in the application and they will give you $5,000, $10,000, $20,000, $100,000. They will not require financial statement. The problem is that credit is very expensive, 21%, 29.99% in interest. And because you don't have a plan, you don't have financial statement, you are not able to use efficiently those resources, but actually those resources have been used to cover the decision that you have taken in the past. But you don't know if those decisions are the optimal decision for your business, or the optimal decision for yourself. And that is the nature of the indebtedness into credit cards. The nature or the sources of the indebtedness on credit card, that is a very, it's not bad, but it's a very, very expensive debt, is the inability to have financial statement that allow you to do corrections and apply for a loan for a lower say, interest rate. And you are always like, you are always just putting fires out. You do not plan for the future. It is not an obligation. You don't have to do accounting in a monthly basis, but there is a reason why people, smart people, and people who plan to grow in the future do it. Is that you see your numbers and you take control of the situation.
That's clear. And what is payroll?
Well, payroll is part of the accounting. It's not bookkeeping. Payroll is different. Payroll, bookkeeping, payroll, and reporting, and the financial ratios as well, and how you take your decision, we'll say is accounting. Accounting, remember I said in the previous video, is being accountable. And the only individual being accountable, or the only way to be accountable, or the thing to be accountable is over an individual. Usually the owners of the business, or the manager, the officers of the business. So they are the ones being accountable. In this particular case, in terms of payroll is one of the sections of accounting. It's not bookkeeping. The payroll is the ability for the business to summarize the details of the monies paid to their employees. It is and it's an obligation to do payroll for every single company in the US. Many people believe that no, because I am the only shareholder, I don't have to do a payroll. That's not correct. Companies in the US, even if there is one person who is the owner, are obligated to do payroll. And if there is no payroll, even if there is no payroll at all, the IRS can go and audit you. And this happens to a client. He came with that problem when he became a client. But he had fixed that problem before, but he told us that he was audited because he didn't have payroll. He was the only one in the company, and because he didn't have a payroll, he was audited, and he was obligated to pay penalties, interest, and taxes. So many people believe that just because they are the only one doing the business, they don't need payroll. They are not right. You have to have payroll because you are an employee of the company, even if you are the owner. It's the basic principle. A company cannot make money by itself. A company cannot make money by itself. Unless, for example, that it is a company for real estate. That you have a house, you have a property, and the property collects money. You collect money for the rental of the property, and you receive that as income. That perhaps an exception. But if you have an active business that you work, it could be any business that you work at, and your presence, either physical or your online presence, is providing you for money, is giving you money, you are supposed to take payroll. And this payroll is just the summary of what you are paying to yourself and to your employees, and the taxes that those monies, those salaries, are supposed to pay to the IRS in the forms of payroll taxes, and to the state in the forms of unemployment taxes. And this is an obligation. Remember, it's an obligation to do payroll, not an option if you work actively in a business.
Understood. And are there any benefits of payroll services?
Well, yeah, The first benefit is that the IRS is not going to audit you. So
Yeah, that's
from the
great.
beginning, if you work, yes, if you work in an active business, from the beginning will be non-being audited by the IRS. And with that, you will sleep quietly at night. In addition to that, you have to report, you have to pay taxes for unemployment or re-employment, as it's called here in Florida. That is also an obligation to the state. You have to pay that to the state, and that happens in every state in the USA. You have to pay your unemployment taxes because of the employees you have, even if it is yourself. But that will be, they say, the obligations that you have. But for you, what will be the benefit of having a payroll? It will, and I will say, well, I will say this. Many times, businesses don't want to have payroll, and they have every employee as a contractor. When that happens and you don't want to do payroll because you don't want to pay taxes to the IRS, you are exposing your business to a liability and a lawsuit, because the contractors can go to an attorney and say, we are in reality, we are employees, and this employer has not paid our taxes to the IRS, but we are the one who have to pay the full amount of taxes, payroll taxes. According to the law, the company must pay half of the payroll taxes, and the other half comes from the employee. But because you don't have payroll tax, you have payroll, the employees, and you pay your employees as contractors, the employees can go to an attorney and say, this employer has not complied with the regulations, and they can sue you, and after the litigation, you will be obligated to pay the taxes to the IRS, the penalties, and whatever has been owed or is owed to these employees. So another advantage of having payroll is be free, or saving your company from any litigation or any potential litigation that employees who are classified as contractors, placed as contractors, will be able, or might present that against you. So that will be another advantage of having payroll. That's another benefit. Not being in the possibility of receiving or participate or be the target of a lawsuit from your employees who are not employees for you, but you pay them as contractor. That's one of the problems that small businesses have in the US, that they classify their employees not as employees themselves, but as contractors. And finally, for you, it's a benefit because you have the real picture of what is the cost of having a payroll compared to the industry. And this is where the payroll comes handy, because you will not be surprised if an employee comes to say, I want to pay this, I want to get paid this amount or pay that amount. No. I know that the industry pays this, and this is how much I'm able to pay. This is the benefit for you. And in addition, if there is an ability for expansion, you have a plan for expansion, you will be able to account for the cost of the future employees that you are going to need. If there is, for example, if there is a problem in the economy, economic conditions are not good as well, or not good enough to allow you to continue, it will give you also the reference of what will be the cost of firing your employees to keep the business functioning. So all this is needed. Lately, say after the pandemics, here in the US, the business provided grants, give free money to businesses because they have payroll. So you run payroll for all these reasons. You are free from lawsuits. You will be able to report to the IRS. You will be able to have control. You will be able to receive benefits from the government because you have payroll. If you don't have payroll, you will not be able. Many businesses will not have not been able. Or in fact, many businesses didn't qualify for the grants, money, forgivable money that the government here in the U.S. gave to small businesses because they have payroll. For those who didn't have payroll, for example, they suffer because the employees, they have to fire employees and they couldn't continue. So it's better to have payroll. If you have a business, better have a payroll even if for yourself. Because if you are the only employee and you have payroll, you will be contributing for Social Security for yourself. And you will be contributing for Medicare, that is the health insurance for the elders, for yourself, if you are the only employee. If you don't do this, you will not be contributed to the Social Security, or when you file your taxes at the end of the year, you will be paying all the taxes in one lump sum. That is difficult because imagine you didn't have the money to pay in a quarterly basis, you're not going to have the money to pay in a yearly basis. So better to have payroll, because even if you are the only employee, will allow you to accumulate Social Security credits and receive your retirement at the end of at the moment that you retire.
Okay, that's clear, understood. And what are the payroll reporting obligations for a business?
The payroll reporting obligations are quarterly and yearly. Or say monthly. Okay, in a monthly basis, businesses must pay to the IRS the money that they withhold from their employees. Typically in a payroll, typically in a payroll, businesses withhold federal income tax, Social Security, and Medicare. Those three taxes are supposed to be paid in a monthly basis to the IRS. In a quarterly basis, you are supposed to pay unemployment tax and report to the IRS, that's to the state, and to the IRS to report all the money that you have paid in a monthly basis for the Social Security, the Medicare, and the federal income tax. That's monthly and quarterly. In a yearly basis, you are supposed to report the unemployment tax at the federal level. So there is unemployment tax at the state level, and there is unemployment tax at the state level. On the yearly basis, you are supposed to pay the unemployment tax to the IRS and give the form that is called W-2. The W-2 is the summary of all the salary that employees receive here in the United States. That is the summary of the salary that they have received, that you have paid them, the taxes that they were withheld, and any other benefit that an employee might have, or the employer might offer, like a retirement plan or a medical plan or any other benefit that the employer might offer that needs to be reported. So there are obligations on the monthly basis to pay taxes to the IRS. There are obligations on a quarterly basis to pay taxes, unemployment taxes to the state, and report and do a report, send a report of the monthly tax payments that you have withheld from your employees. Those taxes paid in a monthly basis need to be reported in a quarterly basis to the IRS, and then in a yearly basis you have to pay unemployment tax to the IRS. It's federal, and also you need to provide what is called the W-2 form. That is a form that is a summary of all the income and taxes paid by the employer to the employee, and with that, employees will file the tax return at the end of the year.
Got it. Okay, and here we have the last question of this part. What is the payroll report to the IRS and what is report to the states?
Okay, to the IRS is reported in a yearly basis, the Form W-2. That Form W-2 is the one that we said before, is the summary of the income and taxes paid by the employee. So that form is once a year, and the employer has the obligation to file that with the IRS and give a copy to the employee to file the tax return. That's at a yearly basis with the IRS. Second, at the yearly basis to the IRS is also Form 940. Form 940 is a form for the unemployment federal tax. That is to the IRS in a yearly basis. In a quarterly basis, there is Form 941. Form 941 is the form that summarizes the income, the payroll and taxes paid in a quarterly basis. So it's a summary of all the salaries paid to the employees and all the taxes withheld. And that report is filed once a quarter. Now, at that point, you are not supposed to pay anything because the payments of the taxes on that report are done monthly. So you pay first in a monthly basis, you send the money to the IRS, you don't do any report, you just send the payment, online payment, and in a quarterly basis, you report those payments to the IRS. That's with the IRS. So we'll say there are three reports: the W-2, that is the summary of income and taxes to the employee; the 940, that is the unemployment federal tax; and also there is the quarterly, that is the Form 941, that is the summary of the income, of the salary and taxes paid to the employee, and you have to report that to the IRS. That is with the IRS. With the state, you have to report in a quarterly basis the unemployment tax. So the only tax report or the only form report to the state is the unemployment tax, and the unemployment tax is the summary of the salaries paid to the employees in a quarterly basis, multiplied by the rate that the state has applied to you.
Okay, understood. Thank you, Fulton, for this detailed and helpful information, and thank you everybody for joining us. Remember, you can check on our channel the different topics we have already explained, and in case you have further doubts, please do not hesitate to send us an email already down in the comments. You are more than welcome. And be sure to subscribe to our channel so you can be notified when we publish new videos. Thank you again, everybody. Thank you, Fulton, and see you in the next video. Bye-bye.